Welcome, ladies and gentlemen. Commodity TV for you today out of our studios in Munich. And with me here is Mark Learmonth, the CFO of Caledonia Mining. You remember the successful gold producer paying a lovely quarterly dividend out of Zimbabwe. And yeah, we want to get an update, of course, because a lot of good things happened in Zimbabwe. And also the company is progressing really fantastically with sinking their shaft. Mark, good morning. Great to have you here.
Good morning. Thank you for having me.
Yeah, perfect timing, I would say. First of all, Zimbabwe got a new president, and maybe you can comment a bit on that.
Yeah, as people will know, the Robert Mugabe was unceremoniously thrown out of office last November, which I think came as a surprise to most people. And since then, there've been elections, and ZANU-PF and Emerson Mnangagwa, the new president, have been re-elected. I've got to say we were somewhat disappointed in some of the activities that happened after the election. It was very unfortunate to see the unfortunate fatalities in Harare after the elections. But I think what people must understand, and I think it's very easy to miss this if you're sitting in Germany or the UK, is the extent to which there really has been a very, very significant change politically in Zimbabwe. And people might just assume that Mnangagwa is from the same mould as Mugabe. We know that's wrong. I've met Mnangagwa personally several times since the elections. Steve Curtis, our chief executive, has also met him several times. And the message we're getting through very clearly from the new president is that things have changed. And he uses the phrase, Zimbabwe's open for business. And we actually believe that. He and his new cabinet absolutely focused on working together with companies like ours to try and stimulate, rekindle economic growth in Zimbabwe. I think they understand that government by itself can't create jobs. They need mining companies and agriculture.
They need investments, right?
They need investment, they need growth. And absolutely clear in our mind is that government is really focused on sort of trying to eradicate the obstacles that exist for people like us. So the most important case in point is the really quite bold step he took immediately after he became president, and he's now enacted it, and we're now taking advantage of it, is the rolling back of local ownership requirements. So one of the big impediments to foreign investment in Zimbabwe was this requirement for all businesses to be 51% owned by local people. We did that 51% local ownership in 2012. But having got rid of this requirement completely, we're now in a position where we're beginning to roll back our indigenization process. There's a transaction we announced a couple of weeks ago, which hopefully should complete in the next week or so, whereby we're moving one of the local partners up from the mine level to a smaller participation in the PLC, and hopefully we'll have further deals to do in due course. But critically, it just is a very clear demonstration to the world and also to the party in Zimbabwe that things have changed, and people mustn't underestimate that. Now, I guess, given the events after the election, the world isn't going to give him the benefit of the doubt, and so people have to watch very carefully to see what measures are taken, what steps are enacted, to actually see if he can earn the credentials for actually delivering change. But we're very comfortable. There's been a very, very big change in Zimbabwe.
Yeah, great. I mean, because I would say the country is quite broken with 94% unemployment, so it could not go worse. It could only go upwards, I would say. And if now the new president is open for business and wants to fix it, I think that's very good news. Also for you guys. And now you're in the mode to increase the ownership in Blanket, right?
Yeah, so we're taking our ownership from 49% to 64% as a result of this immediate transaction, which hopefully will complete in the next couple of days. And perhaps in due course we can increase that stake still further.
Fantastic. Before we come to the mine, you also put out, I think 2 days ago, quite good results update.
Yeah,
which is always important for the mine life for the future.
Yeah, we've been putting out annual resource upgrades. I think this is the seventh successive resource increase. They're getting slightly bigger as we go through. We sort of fairly significantly increased our drilling activity in late 2014 from there on. We are somewhat constrained at the moment in just how much drilling we can do underground. For logistical reasons, we just simply can't get enough equipment down there and do enough work. But yeah, very pleasing uplift. The total resource base has increased from about 1.6 million to just under 1.8 million. Combination of measured and indicated and inferred. We've got 100% conversion rate from inferred resources to measured and indicated, and the inferred resource grade is still significantly higher than the resource grade. And so we're very comfortable that it sets us up quite nicely for the future. It's worth noting that the development we're doing at the mine, constructing the new shaft down to 1,330 metres and the development on 4 levels will significantly increase our capacity to do further deep level exploration. And so we're really setting this mine up for the next sort of 3 decades or so.
Fantastic. So let's talk about this new shaft development, because this is your biggest investment project. You have self-funded that. That's also not normal. So you have no bank in the back which could pressurize you or investors. You are doing this from cash flow. I think you are now at a level of approximately 1,040, 1,050 meters with the shaft. And can you maybe give us a bit of an idea how the investment or how the capex is developing, let's say this year, next year until 2020? And when you think you have finished a new shaft?
Okay, yeah, you're quite right. This is a project that we embarked on in late 2014. So we've been spending about $20 million a year, 2015, 2016, 2017. We're spending another $20 million this year, 2018, and then probably another $20 million next year. But thereafter, as we set out in a technical report that we published many years ago, we updated earlier on this year, thereafter, capex falls away very significantly. So about approximately $20 million next year, then it falls to about 10 the year after that. And then, frankly, our sustaining capex going forward at the moment, our sustaining capex is about $5 million a year. And when the new shaft is operational from 2020 onwards, I really don't see why it should be different from that. So
what will be production then when the new shaft?
About 80,000 ounces a year. So what will happen is our capex comes down and our cash flows are already strong. The operating cash flows at the mine are already $24–25 million a year. It's just we're spending most of it. Again, as set out in this technical report, as we begin to increase production, as the grade goes up, as our recoveries goes up and our costs go down, the on-mine operating cash flow goes up to about $30 million a year, but we're only going to be spending 10 and then less. And so what we call the delta, the difference between the cash we're earning and the cash we're spending goes up very, very significantly. And we'll have something like sort of $30 million of free cash flow at the mine.
Which is a luxury problem to have.
Which is a classic, it's a fantastic first world problem to have. And that we're now within about 18 months of beginning to see this really happen. So I think investors should be, first of all, recognising the changes in Zimbabwe, but just recognising how close we are now to this inflection point in the business, which is really very exciting.
And maybe can we expect then also maybe higher dividends? I mean, you cannot say exactly what amount.
To which I think
is this a management plan?
I think the German word is Geduld.
Geduld, okay,
Warten Sie. But clearly we have demonstrated over the past 5 years a willingness to pay dividends. We pay a quarterly dividend, just over 7 cents a share. We understand how important the dividend is to investors. We think it's a very good discipline on management. And clearly, if we're very disciplined about this. We are not in the business of chasing ounces. We will look at new opportunities in Zimbabwe, but the critical thing in our mind has to be if we were to take on a new project in Zimbabwe, it has to increase the capacity to pay a higher dividend per share than if we didn't do anything at all. So the baseline for me has to be that we will harvest the cash that's coming out of the business. If we can't find anything else to do with that, I can't see why we wouldn't do anything but pay it out to shareholders. Okay?
Well, that's a fantastic.
I'm a shareholder too, so look, I want dividends as well.
That's important because you and the management are sitting in the same boat as the shareholders, right?
And that's very important.
Exactly. Super. Coming to the future business, you already touched it a little bit. Maybe can you give us just a short idea about, is there still a real mining sector in Zimbabwe, or are there, let's say, opportunities you are looking at maybe where you say, you know what, that could be an opportunity where we are buying into something into Zimbabwe? Absolutely.
I mean, until 1980, Zimbabwe was Africa's third biggest gold producer, behind South Africa and Ghana. Since 1980, largely because of the disastrous economic policies in Zimbabwe over the last 30 years, there's been really no new investment in Zimbabwe and very little exploration. And other countries like Mali and Zambia and Burkina Faso have sort of come to the fore and overtaken Zimbabwe. But it's a highly, highly prospective region. We are aware of some opportunities that we are looking at very closely, but you have to go in, as I say, with sort of clenched buttocks and gritted teeth. You've got to make sure the ownership's there, you've got to make sure the resources are there, and that's even before you get down to the level of, under doing the normal mining and sort of the studies to actually work out how would you develop, how would you commercialize these resources. So you've got to be cautious.
And it's all real, so heavy due diligence.
Heavy due diligence, but we've seen some very, very interesting, very exciting prospects. But go back to what I said earlier. We're not going to waste the money from a good mine by buying a bad mine. We're going to be very cautious, very disciplined in our approach to this. But we're very optimistic as to the opportunities there and the growth potential in Zimbabwe.
Fantastic, Mark. Thank you very much. It was a fantastic overview, and thanks for giving us a bit of an insight into Zimbabwe, also because I think it's very important. And people should watch carefully the next development steps in the country. But also your steps, I would say.
Good. Thank you very much.
Thank you very much.
Thank you.
Yeah, ladies and gentlemen, it was Mark Learmonth, the CFO of Caledonia Mining. And you heard it after the elections last year, the new president who is now in charge is really open for business for Zimbabwe. And it looks like that things are really changing to a very positive side after the Mugabe area, I would call it. And Caledonia has delivered the last 4 or 5 years fantastic results. They have done all their investments by themselves out of cash flow and still paying a quarterly dividend. And as Mark also pointed out, from 2020 onwards, the capex is really falling over the cliff, meaning really going down. So there's a lot of cash available. And what I like is the attitude to not just grow for the sake of growth, but really watch carefully where the money will be spent or might be spent in new projects, and of course distribute it also to the shareholders. So check out the company. Thanks for watching us. Bye bye from Munich.